South Africa's economy is showing promising signs of growth in the second quarter of the year, providing a much-needed boost to the nation's economic outlook. This positive trend is a welcome development, especially considering the challenges the country has faced in recent years, including the impact of the COVID-19 pandemic, political instability, and global economic uncertainties. The latest economic indicators suggest that South Africa may be on the path to recovery, potentially avoiding a recession that many had feared. One of the key indicators of this positive economic outlook is the increase in the country's gross domestic product, GDP. Preliminary data shows that South Africa's GDP grew by 1.2% in the second quarter, following a contraction of 0.7% in the first quarter. This growth is driven by several sectors, including manufacturing, mining, and agriculture. The manufacturing sector, in particular, has shown robust performance, with a 2.5% increase in output. This growth is attributed to increased demand for South African goods both domestically and internationally, as well as improvements in supply chain efficiencies. The mining sector has also contributed significantly to the positive economic outlook. South Africa is one of the world's largest producers of minerals such as gold, platinum, and diamonds. The sector experienced a 3.1% growth in the second quarter, driven by higher commodity prices and increased production levels. The global demand for minerals has been strong, particularly from countries like China and India, which are major importers of South African minerals. This demand has provided a substantial boost to the mining sector, supporting overall economic growth. Agriculture has been another bright spot in South Africa's economy. The sector grew by 1.8% in the second quarter, supported by favorable weather conditions and increased agricultural output. South Africa is a major exporter of agricultural products, including fruits, vegetables, and wine. The strong performance of the agricultural sector has not only contributed to GDP growth, but has also helped to stabilize food prices, benefiting consumers. In addition to sectoral growth, other economic indicators also point to a positive outlook. The unemployment rate, which has been a significant concern for South Africa, showed a slight improvement in the second quarter. The latest data indicates that the unemployment rate decreased from 34.5% to 33.9%. While this is still high, the reduction is a positive sign that the labor market is beginning to recover. Job creation in sectors such as manufacturing, construction, and services has contributed to this improvement, providing employment opportunities for many South Africans. Consumer confidence has also shown signs of improvement. The Consumer Confidence Index, CCI, increased by 5 points in the second quarter, reflecting greater optimism among South African consumers. This increase in confidence is likely to translate into higher consumer spending, which is a critical driver of economic growth. Retail sales data supports this trend, with a 2.3% increase in retail sales in the second quarter compared to the previous quarter. Higher consumer spending is expected to boost demand for goods and services, further supporting economic growth. The positive economic outlook is also reflected in the performance of the financial markets. The Johannesburg Stock Exchange, JSE, has experienced a steady increase in stock prices, with the all-share index rising by 4.2% in the second quarter. This increase is driven by strong corporate earnings, investor confidence, and favorable global market conditions. The performance of the JSE is an important indicator of investor sentiment and economic health, and the recent gains suggest that investors are optimistic about South Africa's economic prospects. Government policies and interventions have played a crucial role in supporting the positive economic outlook. The South African government has implemented several measures to stimulate economic growth, including infrastructure investment, support for small and medium-sized enterprises, SMEs, and initiatives to attract foreign investment. The government's commitment to fiscal discipline and structural reforms has also helped to restore confidence in the economy. These measures are expected to have a lasting impact, supporting sustainable economic growth in the long term. Despite the positive signs, challenges remain. South Africa continues to face issues such as high levels of inequality, poverty, and public debt. Addressing these challenges will require sustained efforts and effective policy interventions. However, the recent economic indicators provide a glimmer of hope that South Africa is on the right track to recovery. In conclusion, the latest economic indicators suggest that South Africa's economy is showing signs of growth in the second quarter, potentially avoiding a recession. The increase in GDP, strong performance in key sectors such as manufacturing, mining, and agriculture, improvements in the labor market, higher consumer confidence, and positive financial market performance all point to a positive economic outlook. Government policies and interventions have played a crucial role in supporting this growth. While challenges remain, the recent data provides hope that South Africa is on the path to economic recovery and stability. Thanks for watching, and please don't forget to like, subscribe, and hit the notification bell for more updates.